Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. In today's update, we're taking a closer and more analytical look at the latest developments surrounding the Iraqi dinar and the Vietnamese dong, two currencies that often draw attention from global observers, particularly those interested in emerging and frontier market economies. While headlines around exchange rates can sometimes create excitement, our goal here is to break things down in a clear, factual, and responsible way so you can understand what's really happening beneath the surface. Let's begin by setting the context. Both Iraq and Vietnam are considered developing economies, but they are at different stages of economic transformation. Iraq remains heavily dependent on oil exports as its primary source of revenue, while Vietnam has built a more diversified export-driven economy focused on manufacturing, technology, and trade integration. These fundamental differences play a critical role in how their currencies behave and how exchange rates evolve over time. When we talk about the Iraqi dinar, it is important to understand that its exchange rate is largely managed by Iraq's central bank. The dinar does not freely float in global currency markets in the same way as major currencies like the US dollar or euro. Instead, the central bank of Iraq maintains stability through monetary tools, including currency auctions and foreign reserve management. This means that any movement in the dinar's exchange rate tends to be gradual and policy-driven, rather than sudden or speculative. On the other hand, the Vietnamese dong operates under a managed float system. Vietnam's central bank allows some flexibility in the exchange rate while still maintaining control to ensure export competitiveness and macroeconomic stability. The dong has historically experienced gradual depreciation over time, which supports Vietnam's export sector by keeping its goods competitively priced in global markets. Now, when we examine the latest exchange rate developments between the Iraqi dinar and the Vietnamese dong, what we are essentially looking at is a comparison between two controlled currencies, rather than a freely traded pair, driven purely by supply and demand in international Forex markets. This distinction is crucial because it means that large, sudden revaluations or dramatic shifts are highly unlikely without significant policy changes from either country. From a short-term perspective, current exchange rate stability suggests that both central banks are maintaining their existing monetary strategies. Iraq continues to prioritize exchange rate stability to control inflation and maintain confidence in its financial system. This is particularly important given Iraq's reliance on imports, where a stable dinar helps prevent sharp increases in domestic prices. Meanwhile, Vietnam continues to balance currency stability with export competitiveness, ensuring that its manufacturing sector remains strong in global trade. For followers of the Iraqi dinar, the key takeaway in the short term is that there are no indications of abrupt or extraordinary changes in monetary policy. Exchange rate movements, if any, are likely to remain within a controlled range. This reflects a broader commitment by Iraqi authorities to maintain economic stability rather than pursue aggressive currency adjustments. Looking at the medium to long term, the outlook for both currencies depends heavily on structural economic factors. In Iraq's case, the future strength of the dinar is closely tied to oil revenues, fiscal discipline, political stability, and economic diversification efforts. If Iraq successfully expands its non-oil sectors, improves governance, and strengthens its financial institutions, this could gradually enhance confidence in the dinar over time. However, it's important to approach this with realism. Currency appreciation in emerging markets typically occurs slowly and is supported by constant economic progress rather than sudden policy announcements. Any expectation of rapid or dramatic revaluation would not align with how modern central banking operates, especially in economies that are still developing key financial infrastructure. For Vietnam, The long-term outlook for the dong is shaped by continued export growth, foreign direct investment, and integration into global supply chains. Vietnam has positioned itself as a manufacturing hub in Asia, attracting multinational companies and benefiting from trade agreements. While this supports economic growth, the central bank often allows gradual depreciation to maintain competitiveness. As a result, long-term appreciation of the dong is typically limited by policy objectives. When comparing the two currencies, it becomes clear that they serve different economic strategies. The Iraqi dinar is focused on stability in a resource-dependent economy, while the Vietnamese dong is part of a growth-oriented, export-driven model. This means that their exchange rate relationship is not driven by direct competition, but rather by their respective domestic priorities. Another important factor to consider is foreign reserves. Iraq holds significant reserves due to oil exports, which provides a buffer for maintaining currency stability. Vietnam also maintains solid reserves, supported by trade surpluses and investment inflows. Strong reserves in both countries reduce the likelihood of sudden currency crises and reinforce gradual managed exchange rate policies. Inflation is also a key variable. Iraq has faced inflationary pressures in the past, particularly when exchange rate adjustments impacted import costs. This is one reason why the central bank is cautious about any changes to the dinar's value. Vietnam, while generally maintaining moderate inflation, also uses exchange rate policy as a tool to manage price stability and economic growth. For viewers following these currencies, it's essential to interpret exchange rate news within this broader economic framework. Headlines alone can sometimes give the impression of major developments, but without changes in underlying fundamentals, exchange rates tend to remain aligned with long-term policy objectives. In practical terms, what does this mean for those interested in the Iraqi dinar? It means focusing on credible indicators such as government reforms, central bank policy statements, oil market trends, and macroeconomic data rather than speculation. Sustainable currency strength comes from economic performance, not sudden events. It's also worth noting that global factors play a role. Changes in the US dollar, global oil prices, and international interest rates can influence both the dinar and the dong indirectly. For example, a stronger US dollar can put pressure on emerging market currencies, while higher oil prices can support Iraq's fiscal position and, by extension, its currency stability. As of now, the broader picture remains one of cautious stability. There are no confirmed policy shifts or structural changes that would suggest a major realignment between the Iraqi dinar and the Vietnamese dong. Instead, both currencies continue to reflect their respective economic realities and policy frameworks. For long-term observers, patience and a grounded understanding of economics are essential. Currency developments in emerging markets unfold over years, not days or weeks. Progress is often incremental, and meaningful changes are typically the result of sustained reforms and consistent economic growth. To summarize today's update, in a clear and balanced way, the latest exchange rate news between the Iraqi dinar and the Vietnamese dong reflects continuity rather than disruption. Both countries are maintaining their current monetary strategies, and there are no indications of sudden or extraordinary currency movements. Short-term stability remains the dominant theme, while long-term outcomes will depend on broader economic developments in each country. As always, it's important to approach this topic with a critical mindset and rely on verified information. Avoid making decisions based solely on headlines or unverified claims, and consider the full economic context before drawing conclusions. Thank you for watching. If you value clear, responsible, and factual updates on the Iraqi dinar and global economic trends, make sure to subscribe to the channel and stay informed. This content is for informational purposes only and should not be considered financial advice.